Joining me now is Tomas Philipson, former chairman of the White House Council of Economic Advisors. Tomas, good to see you. Thank you for being here. You know, it's fascinating to watch the tick. This is the last question I have about the Fed, by the way, because a lot of our viewers aren't that crazy about the Fed one way or the other. But to see an initial jump when the news came out of the 75 basis points hike, and then to see it end up at 500 points to the negative was extraordinary. Larry, our mutual friend Larry Kudlow, was on air when it was happening, and they were like, wow, look at that. Why do you think the market reacted so bad? Was it his statement, it's very premature to talk about pausing rate hikes?
Yeah, I guess the written statement came out, there's a half an hour between the written statement coming out and the presser. And the written statement came out, and that was a lot more less aggressive than I think Powell was in his remarks. So it was a 900-point swing, essentially.
Amazing.
However, if you look at the December expectations, that's implicit in the interest rate futures, what people think the rate is going to be, how much it's going to go up in December. That didn't move as much, actually, as the markets moved today.
Well, here's the key, and this is what most Americans can't stand the direction the economy is going in right now by a large majority. They think it's being misdirected, and it's mostly because of inflation, but a recession would be much worse, and yet a lot of economic commentators, mostly on the left, I should say, are saying that there's no way to beat inflation without a recession. The Washington Post just said that today. They said to beat inflation, the Fed might have to trigger a recession. That's not necessarily true, is it?
No, not necessarily. If you expand supply as opposed to cut back demand to lower prices, that's another way. But we already have a quote-unquote recession. I think it's misleading. It's a cost of living crisis for most people because their real incomes are coming down, whatever economists call it is left relevant for your viewers, I think. But in housing, we already clearly have a recession already. We have mortgages down essentially 40% coming off the rate hikes from the Fed.
And since we're not going to get any incentives from the White House, I mean, granted, we may have a big sea change in Congress, both with the House and with the Senate, but that's not going to stop the administration from doing everything they can to do the opposite of what we should be doing, creative more incentives for the private sector, right?
Yeah, I mean, we have a lot more job openings than with people willing to work. And part of the reason is obviously that we're paying people not to work right now. So I think we've seen that in Medicaid policy, food stamp policy, and unemployment insurance in the past during COVID. But there's an enormous wedge between demand for workers and supply of workers because workers are basically compensated for not working.
And it's only getting worse. We now have this huge expansion of Medicaid that's planned, at least for 3 states. It may eventually mean that the entire United States has this expansion of Medicaid to pay for things that are non-medical, everything from apartments to air conditioners, believe it or not. I mean, this is essentially a cradle-to-grave welfare system that they're proposing.
Well, it's demonstrations as Oregon, Massachusetts, and Arizona who are engaged in demonstrations trying to pay for other things than health care in Medicaid. Medicaid has always kind of been like that. They're funded from the feds a lot. So it's kind of free money for the states. Other states are paying for them. So they're pushed spending into ineligible populations. That is to say, richer people than qualifying for Medicaid. That fraud has already taken place. It's been documented. Now they're pushing it into ineligible benefits instead of ineligible beneficiaries. So it's kind of a pattern that's taking place because it's basically free money for the state. So why not spend it as best you can?
And then the other thing that kills me is after months and months of this anti-fossil fuel policies that the administration have of doing all that they can to kill the fossil fuel industry in the United States, the government is going to be spending about $13.5 billion in various programs to subsidize people for spending more money for the fossil fuels that they use. I mean, it's just insane.
Yeah, I think you think of cartels, right? OPEC is a cartel, and the way cartels make money is to restrict output in one way or another. What the Biden administration has implicitly done is that they have assisted this, enforced this cartel by basically mandating supply cuts here in the U.S., essentially. So the reason we have these high profits and the president is going around talking about, profit taxes is because of those and that essentially an enforcement of a cartel. And these demand subsidies will just raise the profits even more because, suppliers can producers can sell at higher prices, even though customers are paying lower prices because of the subsidies.
Tomas, one more. They're giving me a wrap, but I got to ask you about petroleum reserves, which are down. They were expected to be up a little bit. They were down today. We got news that they were down just as we're going into winter, and we're already facing some shortages, some heating fuel shortages. And just at this time, Biden is proposing a windfall profits tax, which would do what to our oil supplies?
No, of course, if you tax something, you get less of it, and you get higher prices as well. So if the goal is to generate more output at lower prices, it's the exact opposite of what you want to do.
Yeah. Tomas Philipson, thank you so much, Tomas. Good to see you. I appreciate it.